Look, it will be concerned. That combination says the fight against inflation is going well, but it is not yet won. And in particular, petrol prices, as you mentioned, a problem. The Saudis are turning back the taps. That is raising the cost of oil and hence petrol around the world. That is, if you like, the latest challenge that the Reserve Bank has to juggle.
Markets are betting against any change to the cash rate tomorrow. What's your forecast?
I think that's right. I think no change tomorrow, no change in a month, and I'm still pretty hopeful no change at all. Most economists think that we're either at the top or maybe one more rate rise. But that conversation is a bit more complicated than it used to be because of the current uptick in inflation.
What are you expecting to hear from the new governor tomorrow? Are you expecting Michele Bullock will emphasise a hawkish pause in her commentary?
Absolutely, partly because it will be true and partly because the more hawkish that the Reserve Bank sounds, the less likely that it is to have to need to do something hawkish. They want to make sure we don't get carried away, if you like, with the pause that's now lasted for several months.
Household savings buffers built up during COVID are now being run down. Where are the main upside risks to inflation coming from?
Well, there's a couple of them. Partly it's a new energy shock with the Saudis and the Russians. Partly it is, yes, people are still spending out at the shops, even though that has slowed notably, and people are starting to have to dip into their savings. Because remember, we have still the equivalent of 7 or 8 months of retail spending in Australia, more in our bank accounts than we had pre-COVID. So that combination says it may be harder to slow the economy and hence to slow inflation than the Reserve Bank has allowed.
Are there concerns in relation to wage growth? Is the RBA flying blind in this area because of the lag in reporting the data?
The Reserve has consistently been worried about wages. It's been too worried. But one of the complications is that flying blind point, that we don't know terribly well what's happened with wage growth, and by the time we do know, it's a little bit late to be juggling the monetary policy levers that much. Having said that, I do think the equation is changing, although the Reserve has been wrong to worry about wages to this point. You would say that prices have been on a sprint and wages are now starting a marathon. As of current month, basically, we are finally starting to see wage growth in Australia that's faster than price growth. And that is a phase that's likely to continue for a while. And not unreasonably, wage earners have lost out. They want to get back what they've lost. But that says that the last mile in the reduction in inflation will be more of a grind, will be slower as wage earners work their way back to better purchasing power.
Around the world, central banks are warning interest rates are likely to remain higher for longer. Do you expect the stage 3 tax cuts are going to influence when the RBA will eventually cut rates?
Absolutely. I mean, we are gradually getting on top of inflation. That does mean that there's the potential to loosen the reins on family finances at some stage. But whereas in much of the world that will show up initially as lower interest rates, in Australia we've got a pretty big tax cut that's arriving in 10 months' time, in the middle of 2024. And so we already know that the initial easing on family finances in Australia is one that's going to go to taxpayers rather than borrowers. To my mind, that says it's going to be perhaps a year away, maybe even a little longer before the Reserve Bank gives us a first rate cut. Our initial relief, taxpayers, not borrowers.